What's going on, YouTube? This is Luke with Endless Entrepreneurs. Just come to you here with a quick 3-tip video on how to prepare for your taxes as a reseller, specifically around eBay, since that's what I sell on. If you're new to my channel, I am a part-time eBay seller. I work full-time in the finance world, build my business in my spare time, kind of juggle those two things back and forth. Really enjoy the balance that it brings. And I've had a lot of viewers ask very recently, what are a couple things that I do to prepare for taxes, to get myself ready ahead of time, to stay organized. Sometimes taxes can be a little scary or overwhelming when you think about it, or if you're not familiar with how it works for reselling. It's not a very overly complex process as far as reselling goes. I'm not going to go through the A to Z on it because I think there's lots of good videos out there on it, but I am going to give 3 really just kind of foundational tips of how to organize yourself and make sure you're best prepared entering that season. And I think now is a good time for that, as I'm starting to actually update all my Q3 expenses and kind of things that happen there. And, we only got, less than a quarter left, basically 2 months before the year's out. And before you know it, we're going to be scrambling and pulling all our stuff together, trying to get it to, if you use a CPA or if you do it by yourself or whatever, just trying to get it all together and tell the story and get it done right. So I just thought to give these 3 tips. I just want to make sure I sound okay in the chat here. We are live, by the way. This is Tuesday, October 24th. If you're rewatching this the second or at a later date, I appreciate you stopping in. Looks like we sound good. Appreciate it, everyone. And yeah, some people are saying, ew, the dreaded word. Yeah, taxes can be a little daunting, but honestly, if you stay proactive with it throughout the year, they're really not that bad. So let me jump in real quick, and I'm going to share my screen at some point. But my first tip here, and I'll walk through kind of how I do it, is if you haven't already, so if you don't already have this process built in, start organizing and kind of phasing out by month all of your food and drink receipts. And the reason I say this, it sounds kind of obvious, but a lot of times when we're out and about doing things and stop at the gas station and grab a snack, stop for lunch while you're outsourcing, whatever it might be, a lot of times we forget to grab those receipts and we forget to include those as part of our write-offs later on. And I did a really bad job my first 2 years reselling doing that. And this last year when I started to actually keep track and I was really diligent about it and I reviewed my credit card statements every month and made sure I parsed out any that I knew were related to a reselling day, is I was like double or triple what I had been reporting the previous 2 years. And, realizing all the money I was leaving on the table, and you only basically 50% of your meals and drinks and stuff are deductible, straight deductible. So if you spend $100, that's $50 off as a deduction, which is huge when you talk about what you're owing the IRS on untaxed income, throughout the year as a reselling business. So that's the first. And the practice that I do, and I'm going to share my screen and show you, I do it monthly. I log my receipts right into where I do my listing and where I keep my listing, my listing log and the track of my business overall. I tie that right in as an overall process. So this becomes a monthly cadence and rhythm. And, I get to the end of the year, I'm not trying to do 12 months worth. Now, another tip kind of on this, and it's just still the first tip, but if you haven't done that yet and say that you haven't taken pull open all your credit card statements, go through, look at your receipts when you source, right? Because you can tell the days you're not sourcing, pair those up with the date, some meals and things that were related to that, and at least try to pull some of those historicals and document and put those into your records so you don't lose out on that deduction, because they can be substantial, and it definitely, every dollar you don't have to pay to the IRS is a dollar in your pocket. So just make sure that you're being very proactive about that. I think that's the #1 tip. And I'm going to share my screen here real quick and show you kind of how I keep track. It's very simple, nothing too crazy. All right, so let me find this. So what I do, and a lot of you who've watched my videos know I use this tracker by month. It's just a tab, an Excel tab, or Excel sheet. I can't talk this afternoon, apparently. And it just keeps track each day of how many items I list, how many items sold, average sell price, what I purchased, average cost per item. And then what I keep track of here is my food and beverage on one column. And so basically what I'll do is at the end of the month, when I'm finishing up each month here, each tab, and just kind of doing my results, I'll take all the receipts out. I usually have them in an envelope just on the counter, and I'll go through and I'll drop them into the dates they apply for whatever they may be, if I was traveling or whatnot. They don't always line up with days that I sourced and bought stuff, because sometimes it's like I drop stuff at the post office, or I was meeting with someone about a wholesale deal, or whatever, whatever it might be that you can pull in there. Make sure you get those in there. Make sure you're deducting those. And I'll talk about the second tip here in a minute. And how I basically track that is, you've got it here, and then you look over at your P&L, and what I would do is I put a line normally on here, and I have it hidden because this was like an operating profit, but I would have an extra line on my P&L, and this is just a simple sheet. If you need this template, by the way, both templates are for free on my website. The link's in the description. Feel free to go grab them if you want to use them. I've got some hidden rows here of just other expenses I have, but I would just add a line here for my food and beverage, and each month it should tally and tie to that. So I actually I don't plug it in my P&L till the very end of the year, but I keep track on a monthly basis as we go, just so that at the end of the year it's not overwhelming. So that's the first one. Let me stop sharing for a minute, make sure we're all good in the chat. Hopefully that makes sense. But I feel like as you go and if you're proactive about these things, guys, it's so much less stressful at the end of the year. I've done it both ways. I've done it the non-proactive way, and it really sucks, and I probably paid a lot more money than I should to the IRS. And then I've done it the proactive way, and it made my life really, really easy when it came to this time. So the second one I'm going to give is to be tracking your mileage. So I don't know what method or what everyone wants to do with that. If you happen to have a company car under I don't know how big your reselling business is. So there are situations where someone might have a company car and you wouldn't deduct mileage. But for most of us resellers, I think deducting mileage is probably the way to go. What I use is Mile IQ. I don't know if you're going to be able to zoom and see that. But in either case, I use Mile IQ. I'm not an affiliate for it or anything, but it is for $4.99 a month. It makes my life so much easier. It literally prepares your mileage log in a tax return acceptable form for an addendum, to have on there as backup. You can export it, give it to your accountant in one PDF, and you're done. And basically, you just swipe left and right on each trip. So each trip that you have, it says, oh, it's got a good offer. Sorry. Each trip that you have, you can say business or personal. You swipe it one way or the other. It automatically logs with the current mileage rate and everything for business versus not, and then you just export it. And for each month, you have your mileage. And again, on my profit and loss statement, I have an expense line for mileage, and I drop the mileage right in there. And those are deductions outside of operating expenses. That's why I don't have those outlined on that P&L. But the P&L template that I have up for everyone, you feel free to add that line in, because I do at the end when I'm doing my tax deductions. So that's tip number 2, is track your mileage. And I'll give a couple other follow-on tips to that. If you don't have Mile IQ, let's say that maybe you didn't know that you could deduct mileage. Maybe you're watching this for the first time. You just got into reselling. I mean, this happened to me. I got 3/4 way through the year and started talking to an accountant, and he's like, hey, have you been keeping track of your mileage? I'm like, no. So the best recommendation I can give to you is, if you saved all your receipts from sourcing, is to go back to those receipts and at least find out the distance between that store and your home. And you should be able to estimate the mileage, at least on your sourcing trips, so that you can backdate some of that mileage and figure out the rate. I think right now it's like 56 cents a mile or 54 cents a mile. Don't quote me on it. I'd have to look up whatever the new one is for this year. But you can go backwards and kind of document that month by month. Use your receipts to kind of triangulate all your mileage. You also, guys, when you go to the post office, that's mileage that you're deducting, right? Anything that's related, like I go to my storage unit back and forth, like that's mileage for my business. All those things count as mileage. If you're on a trip and you're hitting a bunch of thrift stores, right, you can deduct part of that mileage because it's partly a business trip, partly not. All those definitions you really need to think about, because you could be leaving a lot of money on the table. And for me, Mile IQ, it's the easiest way for me to do it. I wish I'd found it a long time ago, but I highly, highly recommend that you start using it if you haven't already. All right, so that's tip number 2. I'm going to share my third tip here. I'm going to share my screen one more time for this one, just because it's easier. 1 second here. All right. All right, going back to this guy. All right. So the other thing I do, and if this is the third tip, is one, you should be tracking on a monthly basis all your supplies and your equipment that you're purchasing, right? Anything that goes towards your business, bins, tape, you got bins, tape, and Tide pens right here as an example. Poly bags, the mailers, anything that you might be spending money on that you're using for your business as supplies, you should keep track. And what I do is I use this log, this listing log, same way I use for food and beverage. I just keep track over here off to the right. And then that way that goes, so $65 in supplies right there. I go to my P&L and I have $65 for April right there. And it's just very clean, very easy for me. to have it right there, to know that it's there. You know, to me, it's just kind of a no-brainer to keep your life simple when you get to the end. And then this is the follow-on to this tip is you also can use your supplies in your planning, tax planning, to kind of forecast eliminating some tax liability. And let me explain kind of how I do this. So I'm tracking the reason why I get to Q3 and I start to really figure out where I think I'm going to land. I look at where is my net profit going to be at the end of the year with all my forecasted deductions, how much am I approximately, after talking to my CPA, going to owe to the IRS. And that leaves me a solid 2.5 months to look ahead at maybe future supplies that I need to invest in, maybe future equipment I need to invest in for my business. Maybe there's fixtures, shelving, whatever, things that I need that maybe I don't need them like this second, but maybe, hey, it's more advantageous to order those things in 2017 so that my tax liability is now lower. I'm incurring those expenses now. And you can start to plan around that, guys. And you can look at it like, for instance, last year I bought almost all my shipping supplies for the entire year of 2018 in 2017. So things like that you can do. And, it's just something to think about. And if you're ahead of the game and preparing now, as they're in Q3, we just finished Q3 and we're at the beginning of Q4, I feel like your life becomes a lot simpler. And again, every dollar that you can avoid paying to the IRS, and I say avoid because it's really tax avoidance, right? It's nothing illegal. You are being strategic, like any business would do, or any business owner, in assessing what your liability is going to be to the IRS and how do I reduce that legally and make sure I'm maximizing every dollar in my business. And so these are just 3 quick tips, guys. These are really the 3 main ones in my mind around reselling, especially if you are